Hey, 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 everybody. Welcome. This is the All-Star Options Jam session for Wednesday, May 7, 2025. We're doing this a day early today. I have some travel coming up. I'm traveling to the East Coast tonight for some company meetings tomorrow and Friday. So I'm going to be a little out of pocket. So we're doing this a day early. I hope it's okay. Well, I just got a fresh haircut. I'm not sure I like it. It looks a little weird. Anyway, this is the All-Star Options Jam session. So what we do is we review action amongst positions in the portfolio, any exits that we may have had, whether for a win or for a loss, any adjustments we may have done, some things maybe we need to pay attention to with open positions. We also we update some stops if some stops are needing updated in our you know, amongst the open positions. And then we review some of the newer trades we've put on in the last week. But before we get into all that, let's just drop the old disclaimer that everything I'm discussing here is for educational purposes only. I'm showing you what I'm doing with my money, and I hope that you learn something from seeing me follow my process. All right, so let's start like we usually do with the big picture, the S&P 500. This is the SPY. I think I talked about this last week a little bit, but the S&P is kind of, if I zoom in a little bit here, we are kind of in the little weird zone between the declining 50 period moving average and the newly declining 200 period moving average. We're in that kind of chop zone. This big red circle here, I just have that because that was when everyone's making noise about the death cross. If you know what a death cross is, that's when the 50 period moving average crosses from above back below the 200 period moving average. Some people like to pay attention to that kind of thing. Make of it what you will, but it's something we should pay attention to. And usually, I think the big takeaway with the death cross is that if bad things are going to happen to a stock market, they usually happen when the 50 period moving average is below the 200 period moving average. So that is where we find ourselves right now. So yes, we've had a dramatic bounce off of the bottom that we experienced on April 7th following the Liberation Day and the tariff news. We've had a very strong bounce. I mean, it looks very similar in the Qs as well. Let's bring that up. Um, we get some old circles here from some old trades. Those are all out. But, it's been a strong bounce. But where do we go from here? I've got some thoughts. I shared a thought with my analyst yesterday in our analyst meeting. I said, and I don't have a whole lot of data to back up this thing. Just call it a gut feeling. But Steve Strass has been pounding the table for the possibility of a V bottom, and a V bottom won't complete until we get back up to highs, right? Which we're more than halfway there, or about halfway there now. I'm open to the mind of a V bottom. I really am, but I feel like what is happening, again, this is just a gut feel. This is 26 years of trading experience just kind of coming to the fore, but I feel like we are due for a little bit of a pullback pretty soon. It may not be all that drastic, but it'll be enough. Maybe coming back down, at least with SPY, like below 540, it'll be enough to get a lot of conversation started about a retest of the lows and perhaps a breaking of the lows, and a lot of "I told you so's." This was just a dead cat bounce. The bear market is real and it's here to stay, and the economy is going to fall apart, and the president and the White House and the terrorists and the yada yada yada. I feel like the noise is going to get really pronounced. Maybe there's going to be a new headline, a new tweet, a new some tariff news that might not be going away. Everyone thinks it should go. I don't know what that's going to be, but I feel like we're set up for a little bit of a pullback here that's going to get everybody freaked out. It's going to get very noisy, but then that sets the stage for a rug pull, and the bulls just rip this thing higher, right back to all-time highs. Just call it a feeling. That's just the feeling I've got. I don't have any data or special insight, or I don't have a direct line to the White House. No one's telling me this. This is just the feeling I have. So take it for what it's worth. All right. Okay, let's talk about positions that we've exited since we last spoke last Thursday in no particular order. We'll start with actually, let's do a particular order. Let's start with Amazon. This one just expired away. This was a bet on earnings. My bet was that Amazon was going to follow through to the downside on earnings. And I did not get that. And our options basically just, or not basically, they did expire away worthless. The options expiration that we chose was the May 2nd weekly options. Those options expired a day after earnings. So this was very specifically an earnings bet. And, had Amazon kind of stayed in the level of where we entered, this is what this purple circle is here. Had we stayed in that area going into earnings, I would have felt a lot better about our trade. But the fact that we had a big rally in the market ahead of Amazon earnings, I don't think helped my cause. I mean, look, here's the day Amazon did announce earnings and we are lower from there. So does that make me correct? I don't know. But either way, the trade didn't work. The options expired worthless. We paid $5.50 for it, and that's our loss. And that's a bummer, but we're out. All right, the next trade was an LRCX. This is Lam Research. It's a semiconductors play. This also was a bearish bet. In fact, all three of these were bearish bets. This one, we had an August bear put spread where we were long the August 65 puts and short the August 55 puts. We paid $360 for it. Unfortunately, we had a couple of good days when we first put the trade on, but like everything else, it got caught in the market bounce, and we got stopped out when it closed above 73. Got out for $1.85, which is not terrible. Not terrible, right? We paid $360 for it, got out for $1.85, so we lost about 50% of the premium paid. And I say this all the time, and I'm going to say it again when I put on these defined risk trades. I assume that if I'm wrong, I'm going to lose that entire 300 or $3.60 per one lot, right? I assume that's a zero. It's not always the case. In fact, it's less often the case, but it does happen like it did in Amazon. But the fact that I got out for, less than or about 50% loss, hey, that's not bad. We'll take it. All right, last up is C. Now this one, interesting thing about this trade is it kind of feels like a loss, but we doubled our money or almost doubled our money, or at least I almost doubled my money. Here's the deal. We bought May 2750 strike puts for 70 cents back here on March 25th. And when this stock followed through at a downside aggressively, which was great, according to my plan, we had a plan that when it broke, I don't remember exactly what the price level was. It might have been 27. The plan was that when it broke that level, then I was going to sell half of my position for whatever I can get. Okay, well, I was able to sell half of my position and I got 212 for it. So on half of the position, I tripled my money, right? And then once we hit bottom on April 7th, we had a strong rally on April 9th and just never came back. And so we got stopped out. My stop loss level was 28. We had a nice big day on the 6th, which was yesterday. And that was the trigger to get me out of my remaining half that I sold for 55 cents. But if you average these two together to 212 and the 55, that works out to be 133. All right. So I bought these puts for 70 cents. And all in, my average exit was $1.33. So almost double. I've almost doubled my money in this trade on a trade that, I mean, if you look at it, it doesn't look like it worked, right? I mean, we entered here, we exited the whole thing here. It doesn't look like a win, but we doubled our money. So, hey, how about that for having a plan and sticking to it? If we didn't stick to the plan of taking profits, then this wouldn't have worked. This would have been a losing trade. So shout out to having a plan and sticking to it. I hope you guys did the same if you were in that trade with me. Okay, let's update some stops. I only have one updated stop today, guys, and that is well, no longer C because we were out of that one, so forget that. But take two. This was a trade that we talked about this last week because um, we finally started breaking out. And our April, this was a call diagonal where we shorted the April 240 calls, but we really want to be long the August 250 calls. And we sold those April 240 calls just to kind of lower my cost basis to bring it down to about 750 debit instead of I think it would have cost me 10 or 11 bucks to put the trade on. And the April calls expired worthless. Fantastic. That's exactly what I wanted to happen. So now I'm just long the August 250 calls with the potential for unlimited gains. And we had a wonderful follow through last week, but then whoop, they pulled the rug from us. I believe this was earnings right here. But you gotta love the take two bounced where it needed to bounce right there at this 50 period, at this rising 50 period moving average. You got to love that it bounced where it needed to bounce, and look at the way it's traded since, right back near the highs. I'm feeling really good about this trade. I'm raising my stop now to 210. I'm setting it right below the low, just below the intraday low on the post earnings reaction or whatever that reaction was. That feels like a significant level to me. That also is where the 50 period moving average is rising to. So now I don't want to see take two break below 210. If it does, that's, to me, that feels like a very strong signal that that the trend is exhausted, and I'll look to exit this trade for whatever I can get for it. But right now, I'm feeling pretty good about this trade. I'm loving the way it bounced off of this low. All right, so that's it for updated stops. Now we'll quickly review the two new trades that we've put on since we last spoke last week. Here's one in Broadcom, ticker AVGO. We put a bullish bet on here. If you want the full trade details and the full plan of action here, you can find it at allstarcharts.com. Just head to the members section and head to the options section. You will find my trade post on AVGO. And that's true for every single trade that we put on All Star Options. You can have the whole detailed plan there. Talks about what we like about the setup, how we're expressing our thesis, how we're managing risk, where we might stop out of the trade, where we may or may not take profits. All of that info is available for every trade that we put on so that you have everything you need to manage that trade confidently going forward. So yes, we put a bullish trade on in AVGO, Broadcom, and similarly, we put on a bullish trade in RGTI, Rigetti Computing. I put this trade on the 5th. I really liked the way it traded on May 2nd. I'm not entirely pleased with the way it's come back the last 3 days, but it doesn't invalidate my trade. It doesn't invalidate my thesis yet. I think this is one of those stocks similar to Kingsoft Computing that, had a very strong run into the end of last year and into the beginning of this year. It gave some back, it got caught up in some of the market turmoil, but I love the way it's been basing here, really finding a solid level 7 being the low of this support. I feel like this support's going to hold, and this stock could conceivably make another powerful attempt at running back to highs, which would be a double from here for the stock. And we are positioned to do even better than that with the option strategy we put on. So again, find all those details at allstarcharts.com. All right, everybody. We only had one stop, but there it is. There's, if you want to take a screenshot of that, if you need to, there it is. And lastly, I'll just, as I always end every one of these sessions, if you have any questions at all, please email me, info@allstarcharts.com. That question will get routed to me. I will do my best to answer it for you. If you're not involved in All Star Options and you want to get the detailed trade plans for every trade that we put on, there's the link, stopmarkettv.com, get All Star Options. It's also in the chat. I put it in the chat there, in the YouTube chat, so you can click the link easily there. And I also have a free newsletter that I write just about every day, not every day, but just about every day, talking about options topics or topics that are relevant to options traders. We talk about lessons, we talk about interviews that I might have had with other people, just things that I think options traders will find of interest. It's entirely free. The link is in the chat as well, so please click that. And of course, if you like the charts that I share here, my friends at TrendSpider have made it so that you guys can have these charts too. I'll put this link in the chat as well. You could use go to trendspider.com and use my promo code Sean50 to get 50% off a subscription plan at TrendSpider. All right, guys, that's all I have for you. Sorry for doing this a day early this week. I hope this doesn't throw anybody off. I'll be traveling the next 2 days, like I said, but I'll still be around. I'll still be in the chat room, the All Star Options chat room, talking about any trades that need talking about, as well as just conversing with everyone there. So please be involved there if you're not already. It's early, but have a great weekend. We're going to be off next week, actually, now that I think about it, because we have our portfolio accelerator event. We're going to be in New Orleans. The whole team will be in New Orleans. So I think we're going to be off next week. Ken, I just saw your, I just saw your comment in the chat. There's a running joke around here that every time I travel, the market sells off. And hey, You know what? I talked about that at the beginning, right? I feel like S&P might be set up for a little pullback that's going to get everybody chattering. So you've had your warning. There it is. I'll be in New Orleans all next week. So stand by. All right, everybody. Have a great rest of your week. We'll talk again soon. Until then, be well.